Welcome back to another episode of Freedom Finance with Lanny, guys. And today I'm going to reveal my big over $1,000 per week investing strategy as my journey to financial freedom really heats up. I'm putting the pedal to the metal and I have an automatic investing strategy, buying ETFs to increase the passive income every single week. No matter what, no ifs, ands, or buts about it. And we're going to take a look at what my strategy looks like, how much in actual dividend income, how much in actual dollars am I investing, and what this might look like in not 1, 2, 3, 4, but in 5 years if I happen to keep this up. So get your favorite beverage, coffee, your beer, your liquor, your wine. I'm Italian, you're Italian today, guys. But I'm just kidding, but let's dive in and let's get it. I think everybody by now knows that I love Vanguard exchange traded funds, or ETFs, a low cost, easy and simple way to buy a basket of stocks within an index, and you just keep it simple. You can automate it and you could forget about it. So I've been doing Vanguard's VYM. And if you haven't caught that $100,000 invested into VYM, check it out. So we've been doing VYM though for well over 3 years, my wife and I. Recently, probably a few months ago, I buy it every single Monday, $300 worth. I also kicked that up recently to every Wednesday as well, based on my income and expenses, to add another $150 per week. So I'm actually doing $450 a week. And then just recently, as of probably early October, in my wife's account, we actually kicked hers up from 2 shares to 3 shares every single Monday. So now in total, when you think about it, with them trading at around $100 to $103, $104 per share, we're buying around $750 per week into Vanguard's high dividend yield ETF. I wanted to provide at least that little bit of an update. But you might be thinking, well, that's not $1,000 or $1,000 plus. We'll get there. Now, a little bit of a background too, guys. My wife works, I work. We have a toddler at home. So we have 2 income, 1 child. So we're still making it work with that. Now, our savings rate though, guys, is what really allows us to invest as much as we can. If you haven't caught it through the videos, we save anywhere from 65 to 75% plus of our incomes. But how exactly can we do that? It's all about our housing expense, really, when it comes down to it. Bought a house in 2011 that was well under 100 grand. Then we refinanced the rate down to below 3% in 2020. So our mortgage payment is significantly low. In fact, the property tax per month is actually more than the principal and interest on our mortgage payment. So our expenses are very low in general, and specifically the largest expense that is usually on everybody's expense or income and expense budget model. Not only that, guys, because we're in a small house, it's less than 1,500 square feet, our utilities are also very low. Typically when you add up internet, water, sewer, energy, which is gas, electricity, the total expense there per month is usually under $250 to maintain our house every single month, guys. So not only is the principal interest low, but the utilities for this house, because it's a smaller house, is also low. So that, again, allows us to really not just, juice up the savings rate that we can, but given that the biggest item is fixed because of that, refinanced mortgage rate, that there's really little variability. Even if our utilities went up 10%, we're only talking $25. So again, what could happen also is significantly reduced because of that fixed rate mortgage. And if I could, I'd say, yeah, go back in time, go buy that house in 2020, 2021 with a rate below 3% before real estate took off 20 to 30%. That would be my best recommendation right now. But we can't do that. But what we can do is save as much money as possible and invest as much money as possible. So I already talked to you guys about VYM. VYM, again, my wife and I are doing about $750 per week, automatic, no matter what. On Monday, she's buying her 3 shares of VYM. I'm buying my 300 and then an extra 150 on Wednesdays. So how do we keep going above that $1,000 threshold per week no matter what? Well, I'm buying $60 per day into Vanguard's S&P 500 ETF VOO. Another video that you could have caught was I analyzed what happened after investing 396 days straight into Vanguard's VOO, crossing $25,000. Check that link as well because you might get a kick out of it, because I may or may not have been outpacing the S&P 500 in and of itself because of it. So 300, okay, that gets me at least over 1,000 because 60 times 5 is 300. 300 plus the 750 VYM is over 1,000. But I'm not done yet. I do Vanguard's Dividend Appreciation ETF to round out the 3 Vanguard ETFs I'm buying no matter what. I'm doing $40 a day or $200 a week. And that brings our total to over $1,250 per week no matter what. I like VIG because it gives the growth in the dividend as well as some of the appreciation. So it's almost like you get more dividend growth than VYM, but you also get some of the growth that the S&P 500 gives you. So that's why I also have that third ETF in the portfolio. So I'm going to show this chart here, guys. This is what 1 week looks like. Typically around $1,250 to $1,260, give or take another 10 in each direction, guys. And what I'm showing you is how much it cost each and every week to do this, because it's not a flat dollar amount in my wife's account. Remember, she's buying 3 shares at the market price, whereas on the SoFi app, link below in the description, where I automate everything. I love it. You know, I'm putting a flat dollar amount, so no matter what, I'm picking up partial shares, whereas in her account on Ally, it's whole shares. So SoFi, love it. Link below, highly recommend it. You know, I've got a bunch of videos to show how I automate my investing there. So then on this chart, I'm showing you how much dividend income each of these purchases adds. So you could say on any given week, after investing over the $1,250, I'm adding about $33 approximately in forward dividend income. Then I'm showing you also what the weighted average dividend growth rate, because as a passive income investor, I want my income to grow automatically. So you'll see off in the far right, what is that dividend growth rate for each of the ETFs historically. And then I calculate out in that bottom line, not just an average, but the weighted average growth rate, which is taking how much I'm putting in each ETF divided by the total, multiplying it by the growth rate and adding it each up along the way. So the dividend growth rate on a weighted average basis is 7.14%. That's a very good compliment considering the weighted average yield on this is 2.65%. So you can add those two together and yeah, you're at a nice, you know, pretty much, let's just round it up to 9.8% dividend compound factor. But what if I did this? That was just 1 week. What if we did this 52 weeks out of the year? Well, I'm also showing that you're investing over $65,000 in 1 year. So yes, with a high savings rate, with dual income and 1 toddler for now, we have the ability to do that. It's difficult, but every month we're trying to make slight tweaks, whether that's negotiating on insurance, whether that's changing up the utility supplier, you know, and budgeting for other large expenses that we might have in the year. So $65,000 invested, you can add over $1,700 in forward dividend income if you did this for 1 year. All right, Lanny, cool, neat. You save a lot, you invest a lot, you automate it. But what if you did this for 5 years? What if you do this for 5 years with an average rate of only 7% return on what these investments are doing? And then what if you reinvested all your dividends? And we'll just consider only a 1 time a year compound factor, even though these dividends pay quarterly. So not only are you dripping the dividends, but your dividends are also growing by an average rate of 7.14% per year. So let's look at that 5-year chart if you did this for 5 years straight. At the end of 5 years of doing this strategy, you've built now a $400,000 portfolio, a $400,000 portfolio that produces $10,600 in income. And again, that $10,600 in income is also going to grow every year at over 7%. And all you had to do, again, it's very hard, but is you invested over those 5 years, $65,000 a year, $325,000 plus in total after 5 years. So you've got the appreciation and the growth of the dividends being reinvested to buy more as well. So you end up with almost 400 grand and well over $10,000 in forward passive income. So you can kind of get a little bit of a taste of how this strategy could work. Again, we're just starting out doing this. We're about 5-6 weeks in at this level of investing. So let me know what you guys think in the comments. Are you guys investing this much per week? Do you have one income? Are you with a significant other with 2 incomes? What's your savings rate like? What is your investing strategy like? Are you focused on the income, the market value / appreciation, or a combination of both? Let me know below, guys. And also, subscribe. Come on, subscribe to this channel. Help your guy Lanny out here. Definitely like this video. Let me know what else you want to see. I know I'm working on the best way to do a budget video, my food budget, my house budget, really wanted to show you those details because that allows me to do all this stuff that I'm talking about here. So let me know in the comments what else you want to see, guys. And again, I appreciate you for rocking with me. Keep saving, keep investing. Let's all get the financial freedom. This is what it's all about, guys. This is Lanny from Freedom Finance. Catch you on the next one.